So hey guys, welcome back to my channel. Today we are going to look at what happened in euro dollar last week. So without wasting time, let's get started. So welcome back to the channel. In this video we are going to look at what happened in euro dollar last week and how many setups were formed in the last week. So let's go over to the charts. Now if you guys can see over here that this was Monday, and on Monday what happened, price was making lower lows, lower highs, lower lows, and all of a sudden it made a higher high over here. Okay, now let's look for daily bias first. That's the main important thing which you should do. So on daily time frame, if you go on daily time frame, you can see that what happened in daily time frame. So this was the Monday's candle. Okay, and on Monday we saw a clear bearish close. Okay, it opened over here and it closed below of this low. This was the previous day's low. So what does it mean? It means that price is going for sell side liquidity. Okay, it's not hunting sell side liquidity, it's raiding, it's giving a raid, it's just running off from the sell side. Okay, so now you guys can see that there's a big displacement between the close of this candle and in the previous day's low. Okay, and this is the Monday's candle. So Monday's candle was enough for me to know that what is the bias. So what will be the bias for the week? So now on Tuesday I was waiting for price to go and fill the imbalance which is over here. So I knew that price will go and hit this previous day, like this day's low, right? Day before previous day's low over here. So now I was looking for sells from here. So but I didn't took the sell because the price first went down and took the low, and what's below of this candle's low? Sell side liquidity, right? So now my bias is bearish, and if I will look for buys, then those buys will be like for scalp trade. Like I will not hold it for long because I know overall bias is bearish. So if I go on small time frames, yeah, over here, as you guys can see it over here, it's Tuesday. On Monday nothing happened. Okay, like it was doing consolidation and then it went up above this high and this high over here. Okay, but price didn't reach. So here's my setup. What will be above of this high and this high over here? Like people will be thinking that this candle over here is what is supply zone. Okay, and this is what resistance. So what will be above of these lines? Stop losses, right? So now I know that there will be stop losses over here, and the overall bias is bearish, so price will go high and take the stop losses first, and then it will go for sell side liquidity. Okay, then it will go down. But my sell limit was at round psychological level over here, 1.16200 over here. Okay, this was my round psychological number, and another one was this one over here, this 101. If you can see it over here. Okay, I hope you can see it. So now as you guys can see that price didn't reach at this level, I would have taken a sell from this level. So the time goes on, and then on Tuesday, now let's go on Tuesday. Now on Tuesday I can see that price made a higher high, higher low, then it made a higher high. Okay, now this was the dealing range, and then price made another higher high over here. Okay, and now I can see that price is creating some sort of trend line over here. Okay, it's creating a trend line, and this is a trend line break and retest over here. I hope you guys can see. So I knew that price will go and take the buy side liquidity once again. So what happened, there is this relative equal lows, and I posted this trade I guess on Discord. So like this was the demand zone over here. So what will be below of this demand zone? Stop losses of the traders, those who took a buy from it, those who will take the buy from this level over here. Okay, and where the stop losses will be over here. So now I was waiting for price to go down and take the stop losses first, and then I will look for small scalp. Okay, because I was not getting a good trade for sell. So now I can see that price has taken the sell side liquidity, and the New York session started. So this blue region over here is New York kill zone. Okay, so now I can see a market structure shift over here, and then there was this fair value gap over here. So I placed a buy over here, and my stop loss was a little bit below the structure, like over here somewhere around. And my target was this London session high, because what will be the above of the London session high? Buy side liquidity, right? And overall market is bearish, so price will take buy side liquidity, and then it will keep on falling. Okay, because on higher time frame we can see that what's over there, buy side liquidity. And there's another thing over here, this day before previous day's low. Okay, as I told you, price just filled that whole imbalance over here, and then it started to fall in London session. But then in New York session, price went again one more time towards the upside. Why? Because there were lots of traders those who took a sell from here, from those who took the sell from this breakout. So market wanted to kick all of those guys outside. Okay, so then market went up, took the stop losses once again, and then it gave no chance for entering in the market. I think there was some news over here. Okay, so now let's go on Wednesday. What happened on Wednesday? Like Wednesday was also a, there was nothing new on Wednesday. It just followed the trend. Okay, over here I was looking for this. If you guys can see, I didn't took the trade, but you can see a pattern over here that price all of a sudden made lower low, lower high, lower low, lower high, lower low, and all of a sudden price went up and took this high. Okay, so what do you think what was happening over here? And it happened in the starting of London kill zone. They took the buy side liquidity right over here, and now what we'll do to take entry, we'll look for a round psychological number. So round psychological number above of this liquidity pool is this one, 1.15900. So you can see how from a pinpoint price just tapped at this level of round psychological level, and then it started to fall down. Okay, and there was one imbalance also over here. Price just filled that imbalance and then it started to fall down. Now let's see on Thursday. There was nothing on Thursday, like it was a consolidation day. You can see that there was no trade and there was a big news at that day. Okay, and now comes the Friday. Friday was a good day. Okay, because price went up, took the buy side liquidity first in the London session, and then it gave a structure shift. Now look into this price leg. Can you see any imbalance? There's only this imbalance. So this is not imbalance, this is fair value gap. Why? Because when price took the liquidity, took the stop losses, okay, and then it fell down, and the gap which is left over there, that's a fair value gap. That's the gap which you're getting on a fair value. Okay, so I would have taken a sell from here, but I missed this trade, and the stop loss will be this high over here, because this is a swing high over here, and I have a swing highs and lows video also if you guys want. Okay, and then now what our target will be? Where's the sell side liquidity? At the previous day low, right? Below of the previous day low, there will be sell side liquidity. So that will be my target, 1:2. So like that's how simple it is. Okay, and why I was so confident with this trade, because this trade was aligned, it was aligned with the higher time frame narrative, and higher time frame narrative is bearish. So now let's look in New York session. So what happened in New York session? It made a lower high from here. This is a lower high over here. Okay, then it made a lower low. All of a sudden it made a higher high. Okay, so now tell me that this candle, what this candle will be for a new beginner trader. It will be a supply zone for a trader, right? So he will take the sell from the starting of this zone, and where his stop loss will be a little bit above of this structural high, right, somewhere around over here. So what price did? Price took the stop loss, then it gave a confirmation that it is about to fall down. Then there was a fair value gap also, if you guys can see over here. So so in this type of scenario, you will enter at the starting of this fair value gap, and your stop loss will be a little bit above of this structural high. Okay, and there was this round psychological number also over here, this 1.15200. Okay, you could have entered from this level also, like this, and your stop loss will be 10 pips. And where is the sell side liquidity? Below of this structural low, right? Because this is London sessions low, or like this is daily's low. So price went down and took the liquidity from here, and then it started to do consolidation. So the thing which I'm trying to say, that if you guys know about liquidity, okay, because market goes from buy side liquidity to sell side liquidity, and all of these fair value gaps, order blocks, and optimal trade entry, these are the means to enter in the market. But the main market is moved by liquidity. And what is the liquidity? Liquidity is stop losses. Liquidity is the stop losses of lots of traders. Okay, anyone can be a liquidity. Okay, because if I am wrong, I will be the liquidity in the market, and someone else will win. Okay, so now you have to enter where the masses will put their stop losses. Okay, when masses are being out, then the masses of traders stop losses got hit. At that moment you have to enter. Okay, an average trader, or like the trader who is just beginning, he's just a beginner, he can see a supply and demand videos. Okay, and then what he will do, he will learn supply and demand, and then he will trade on that. Okay, and lots of traders will do that. So the big institutions can see that. Okay, they know that where the stop losses can be, like they assume, and they have data also. Okay, So then they don't assume, they have a proper data. Okay, they buy it from the Bloomberg and all, but they have a proper data. But we, as a normal trader, we have to assume that there will be stop losses. So we have to be with the market maker. Okay, the way he is trading, or the way he is getting into the market, and even the way he is getting out from the market, in and out. Okay, so this is how it works. So I hope you guys understood, and if you guys have any questions, just comment down in the comment section and let me know on what topic I should make another video. So until next time, wish you good luck and be safe.